What is up, everybody? Happy Tuesday and welcome back to the Everything Crypto Show, where we keep you up to speed on the most important news moving the crypto markets. Now, we are back today with a very important daily market update. Today is the last day of February, and even after a pretty even month in terms of the price action, we've seen a lot of news come out this past month, and more specifically over this previous weekend. And the first big thing I do want to discuss is SEC Chairman Gary Gensler confirming that everything other than Bitcoin is in fact a security. We're going to talk about what this means for Bitcoin as well as the altcoin market. Then I do want to talk about Binance here, who did in fact force close the positions of about 500 Australian accounts. Actually did cause some of these accounts to sell their positions at a loss, and although they are promising full compensation, obviously customers are not happy with the fact that Binance had gone ahead and force closed people's open trades on their centralized exchange. And this comes at a time when Coinbase did actually go ahead and announce that they would be delisting the Binance stablecoin BUSD from their platform. So the exchange wars are heating up, the stablecoin wars are heating up, at the same time that the SEC chairman is taking aim at the altcoin market. Definitely tons of stuff to get through in today's video, and without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now, before we hop into the content, make sure to hit that sub, like, and notification bell and join the Everything Crypto Squad. And with that, we're going to hop right in here with the question of the day. So today I want to know, do you think Bitcoin will revisit the lows at 15.5K this year? Let me know in the YouTube comments down below. And 15.5K was actually the lows of the 2022 bear market. I do see this as an accumulation year, but that does not mean we cannot make some new lows even before we do go higher. So let me know what you were looking for from Bitcoin in the comments, and I'm going to walk you guys through exactly what I am looking for Bitcoin here when it does come to the charts. And if you guys have been watching our videos over the past couple of weeks, we did speak about this key area at $25,000. I did say after failing to close 2 weekly candles above this area that it was very likely we were going to make our way back to $20,000 if we could not get this technical breakout. And you can see here that not only once but on two different occasions, Bitcoin did come in here for a nice fake out. We actually wicked above 25K here, above the 50 and 200 week moving average very briefly, and then broke back below it. So to me, the next key area for Bitcoin, and what I think is going to act as a very strong level of support, is the $20,000 level. Now, if we go ahead and zoom out here, you guys are going to notice that 20K is the 2018 all-time high. We do also have the bull market support band currently range bound in between 19.6K and 21.2K. So lots of different technical indicators suggesting to me that 20,000 is going to act as a very big level of support. And I mean, long term here, if we actually take a look on a monthly chart, I mean, you guys are going to notice that in the long term, this is simply just a very healthy pullback for Bitcoin. People are getting overly bearish here and saying that, you know, we may in fact revisit those lows, and that could be the case. But to be honest, I actually don't think we are going to go for a revisit of 15.5K. I think it is much more likely that we get a healthy retest of $20,000 and then continue our way to the upside. And I did kind of expect that 25,000 would be a strong area of contestants for Bitcoin. The main reason being that this is where the 200-week moving average sits, and I've actually shown you guys the 200-week MA heat map here. You guys are going to notice that historically speaking, this has been a very important technical area for Bitcoin. It has previously acted as a very strong level of support when Bitcoin is above it, and this is the first bear market in history when Bitcoin actually broke below it and has now spent a sustained period of time below this key level. And just like any other chart, what once acted as a strong level of support should now act as a strong level of resistance. And the 200-week MA, I mean, it's actually probably one of the strongest levels of support for Bitcoin in its history. So therefore, it'll now act as a very strong level of resistance. So what I'm looking for on Bitcoin here is a retest of 20K before we consider any move back to the upside. And then when it comes to Ethereum, very similar to Bitcoin, I am looking for a retest of the 2018 all-time high. And Ethers actually comes in here at $1,400. Now, the only real difference between Bitcoin and Ethereum is the fact that Bitcoin is actually below its 200-week MA, while Ether is above its 200-week MA. But very similarly to Bitcoin, both of them are getting rejected at the 50-week moving average. You can see here that on Bitcoin, it got rejected at the 50-week back in March of 2022, and just got rejected here again more recently in the new year. And then if we take a look at Ethereum here, Ether also it actually faked a breakout above the 50-week MA here in March, and then broke below it and is now once again getting rejected at that level. Now, interestingly enough, the 200-week MA for Ether actually sits at 1423. The 2018 all-time high sits at 1400. So to me, it seems very likely that Ether does come back in for a retest of that level. Now, February here, in terms of the actual price action, it's been a pretty mute month. I mean, Bitcoin was up only 0.83% on the month, and honestly, by the time this video goes live, that could definitely change, but we have Ether here up 3.05%, so it looks like Ether is going to end up outperforming Bitcoin in February, although Bitcoin did outperform in January, and I do expect that Bitcoin is going to actually outperform throughout this accumulation phase, as well as kick off the next bull run, not only because of prior history in terms of crypto market cycles, but also because of some of the statements we have seen from regulators, which are definitely in favor of Bitcoin here, and not really sounding too good for the altcoin market, to be honest. So we're going to get into that next year, and the first thing we did here was from the Treasury Secretary Janet Yellen, who said that the United States has no intention to ban Bitcoin and crypto. However, this does come with the caveat that she is also calling for a strong regulatory framework for crypto activities. So she says here that the US is not suggesting an outright ban on crypto, but, and this is a big but, there has to be a very strong push for regulation. If regulation fails, if you're slow to do it, then we should not take off the table banning those assets because they may create financial stability risk. And by financial stability risk, I think what they mean is they are scared of crypto actually overtaking their current financial system that they have in place. So effectively what she's saying here is that they are not looking to ban crypto if they are able to have a very tight grip on the market and regulate it. And if they cannot regulate the market as they so please, then they may consider an outright ban. So kind of a deceiving statement, because she basically said that they're not looking to ban it, but only if they can get some very strict regulatory frameworks in place here, as it is a quote-unquote threat to the financial stability of the US. And at the same time, we had Gary Gensler here make a comment. I think this one is much more important to pay attention to, and he basically confirmed that everything other than Bitcoin is a security. So this comes right out of NY Mag, and he pretty much says right here that everything other than Bitcoin, you can find a website, you can find a group of entrepreneurs, they might set up their legal entities in a tax haven offshore. Worth noting, a lot of people are actually setting up their businesses offshore because of the lack of regulatory clarity in the US. That is why FTX was an offshore company, and look what happened with that exchange. He says they might have a foundation, they might lawyer it up or try to arbitrage and make it hard jurisdictionally or so forth. In other words, there are people behind these cryptocurrencies using a variety of complex and legally opaque mechanisms, but at the most basic level, they are trying to promote their tokens and entire investors. Bitcoin, because of its unique history and creation story, is fundamentally different from other crypto projects in this respect. They might drop their tokens overseas at first and contend or pretend that it's going to take 6 months before they come back to the US, but at the core, these tokens are securities because there's a group in the middle and the public is anticipating profits based on that group. They claim that crypto investors are hoping to profit based on the efforts of those intermediaries in much the same way that stockholders in public companies hope to see their investments appreciate over time. Is central to Gensler's position as a legal matter that these are actually transactions in securities that fall within the SEC's jurisdiction. Now, it's worth noting here that he did say, based on the interview, or what they kind of inferred, was that pretty much every sort of crypto transaction already falls under the SEC's jurisdiction, except the spot transactions in Bitcoin itself and the actual purchase or sale of goods or services with cryptocurrencies. So, two things I want to break down here, really three. Number one, Gensler says right off the bat that for everything other than Bitcoin, there is some sort of a foundation behind it, some sort of group of entrepreneurs. They might have a foundation, and this is a key word here because it does signal to me right off the bat that not even Ethereum itself is safe. So I'll actually go ahead here and pull up a tab and let's search Ethereum Foundation. Not foundation, but it should come up regardless. Yeah, so you can see right here, the Ethereum Foundation, it does in fact have their very own homepage. This is sort of like the entity that does oversee Ethereum. We literally just saw them completely change its consensus mechanism from proof of work to proof of stake, and that shows you guys that Ethereum is not truly decentralized. There is in fact a foundation behind it. And the other thing that he did kind of talk about here was actually investing in these coins in sort of hopes for some return, the same way that you would invest as a stock, which is also defined as a security. So right off the bat, I mean, the Ethereum Foundation does also have their very own Twitter page. Bitcoin does not have a foundation. Bitcoin does not have a Twitter page. And when it specifically comes to actually looking to profit from these coins, I think what he's referring to mainly here is actually staking these cryptocurrencies in return for this APR. And you can see here right off the bat that you can currently stake your Ether via Lido.fi for a 4.7% APR. That means a 4.7% annual percentage return. So right off the bat, Ethereum does kind of fit the description of what Gary Gensler is in fact describing as a security. Now, what I thought was pretty interesting here was they did mention that they might actually exempt the actual purchase or sale of goods or services with cryptocurrencies. And that's something I would like to see some sort of leniency towards, is that could potentially be a loophole for people to actually spend their cryptocurrency as opposed to selling it and paying taxes. But I mean, I honestly don't think the SEC is going to let that fly. And I think that whether you are buying something with Bitcoin or selling Bitcoin into USD and then buying it, that they're going to make both of those taxable events. I think that would just make the most sense. Otherwise, people are just going to opt to not sell their Bitcoin and find ways to sell it as crypto does become more adopted by a lot of these retailers and these payment providers. And I did tweet this video here. This video has gone viral, and I said SEC versus the altcoin market. I've seen this video quite a few times on Twitter. And I mean, honestly, that looks exactly like what the SEC is doing. We have Yoshi slowing down here, just absolutely slugging these green turtle shells at every single card that it can manage to find. And the same way, I do think the SEC is actually slowing down the crypto adoption in the US and absolutely just hammering the altcoin market. But the big takeaway here for me personally is that Bitcoin is really the only crypto that does have that regulatory clarity. That is something I have said about Bitcoin from the beginning, that does separate it from every other cryptocurrency out there, and that's the reason I do think Bitcoin will remain the #1 crypto for the foreseeable future in terms of that market cap. And if you guys are not convinced that Ethereum is not safe from the SEC, I will remind you that right after the merge to proof of stake went live for Ether, Gary Gensler did make a statement essentially saying that proof of stake tokens basically take on investment contract like attributes, as they do generate new coins for investors who pool their holdings. So pretty suspicious that he did make that comment specifically pertaining to proof of stake mechanism after we saw Ethereum transition to proof of stake. And this once again does lead me to believe that Ether will also be subject to regulatory scrutiny in the future. Now, speaking of the transition from proof of work to proof of stake, it has proven to be a massive sort of like deal here for Ethereum's tokenomics. In the past 165 days, we have seen 39,000 Ether been burned off. Now, compare this to what would have happened had Ether stayed under proof of work. We would have actually seen 1.9 million Ether being issued here, which would have brought the total supply up to 122.4 mil. Instead, we actually have the total Ethereum supply sitting at 120.4 mil, so 2 million Ethereum less to go around here after the transition to proof of stake. And this is in the middle of a bear market, which does, historically speaking, have less on-chain activity. I think once we are back in a bull run here with more sustained on-chain activity, more buying pressure, more euphoria in the markets, that is when we will see the true Ethereum beast come out here, as we see a lot more Ether being burned off hypothetically. All we need here is the coin meter to stay above 15.5 for Ether to remain deflationary. We are currently sitting at 43 on the coin meter, and this effectively does create some sort of a snowball effect that we have been hypothesizing that has kind of been validated since the new year. And it goes something like this. So we see more buying pressure on Ether, which leads to more on-chain activity as people are moving this Ethereum around. More on-chain activity leads to the Gwei meter going above the magic number of 15.5, which means that more Ether is being burned than being brought back into the float and issued out to these validators as staking rewards. And then people begin to realize that Ether is deflationary, causing more FOMO, more buying pressure, and the cycle just continues from there. And you can see here that since the rally we have seen in the new year, I mean, we actually saw Ether with a positive issuance of 5,000, and that is now down to 39K, effectively meaning that from January 2nd, 44,000 Ethereum, just over that amount, has actually been burned off here. And this is even after we have seen selling pressure now on Ethereum, as it has kind of gone down a little bit over the past weeks, and not anything too big at all. But it goes to show you guys that I think people are really beginning to wake up to Ethereum and the new tokenomics that I do think will make it much more valuable and still a top performer in the next bull run. And I mean, I think it should go without saying, but if you guys have been with the channel for a while, I do say pretty often that I think Ethereum will remain the king of DeFi for the foreseeable future, and it pretty much is the backbone of DeFi infrastructure. If we actually take a look at DeFi Llama here, and it's pulling up Cronos chain because we talk about that project pretty often, but I know for a fact that at the moment, Ether makes up over 65% of all total value locked on DeFi as a whole, and that is a significant lead that I don't think it is going to give up anytime soon. We have the BNB chain in second place here, making up about 8.63% of the total value locked on DeFi, compared to Ether's 65.79%. Now, speaking of BNB, I do want to get into Binance here, as they did actually close derivative positions of 500 Australian users, saying that they will compensate them for their losses. So Binance said on Thursday that it incorrectly tagged 500 Australian users as wholesale investors, resulting in their derivatives positions being force closed here. So documents show that Binance Australia has historically not allowed retail traders to trade futures and financial derivatives products on the platform in accordance with local regulations. Only quote-unquote wholesale traders are allowed to trade such products on Binance. I don't know what a wholesale trader is. It sounds like Costco or something. I have no idea. It says here, we have already contacted all impacted users and will fully compensate them for their losses incurred while trading derivatives on Binance. Obviously, these clients were not happy to wake up and see their derivatives positions were closed, and they're now just waiting for a refund from Binance. CZ did also go ahead and tweet here. Pretty much quote tweeted a picture of the email that was sent out to these Binance Australia users who were impacted, and he did say once again that users will be compensated for any loss incurred due to the forced close of these positions. Now, at the same time that Binance pretty much ticked off about 500 Australian users, we did also see Coinbase Assets tweet here, we are regularly monitoring the assets on our exchange to ensure they meet our listing standards. Based on our most recent reviews, Coinbase will suspend trading for Binance USD on March 13th, 2023 on or around 12 p.m. Eastern Standard Time. So effectively, Coinbase is delisting BUSD from their platform. The stablecoin wars are heating up, and they say here that they are regularly monitoring the assets to ensure they meet listing standards. And I think that what they are referring to here is the fact that Paxos is facing an SEC lawsuit over Binance USD. So to make the distinction right off the bat, Binance USD is not actually owned by Binance. It is owned and issued by Paxos, and Binance has simply struck a deal with Paxos to give them the licensing rights to using Binance on the face of the stablecoin. So it is issued by Paxos, but pretty much sort of like representative of the Binance ecosystem. And here it was actually gone ahead and announced back on February 12th that the SEC is going to be suing Paxos over issuing a Binance USD stablecoin, saying that it is an unregistered security, according to the people. I don't know what people said this, but even the SEC is now going after stablecoins, deeming them securities as well. And I don't think it's a coincidence that they are trying to go after the stablecoin market now, after we have seen some interest from them in actually creating their own CBDC. So pretty interesting here that the SEC is now attacking the stablecoin market, and this kind of goes against what they said previously about an expectation of profit. I mean, because when it comes to stablecoins, like, it stays on peg with the dollar. So what are you expecting in terms of profit from a stablecoin? It's stable, or it should be, but some of them do depeg. But Binance USD has been actually a very stable coin alongside Tether and Circle's USDC. So pretty interesting that they are still opting to go after BUSD here. I do believe this is why Coinbase is in fact going after BUSD and delisting it from their platform. But there definitely is an ulterior motive here that I do want to discuss, and that does have to do with USDC. So we talked about how USDC is issued by Circle, but what it is worth noting is that Coinbase did actually participate in building USD coin. It is issued by both Circle and Coinbase. So I don't think it's a coincidence that Coinbase is going after BUSD and looking to delist it from their platform while they have their very own native USDC. And we can actually see here, since the announcement that the SEC was going to be going after BUSD, I want to go ahead and pull that up here for you guys and show you that as there's going to be no more BUSD being minted, as effectively it is being forced to shut down, we're probably just going to see a very slow bleed out of its market cap over time. So I'm going to wait for it to load because for some reason it's moving really slow today. And we can see here that in the past 3 months, go to the past 3 months. So we can see here that as of December of last year, BUSD sat at a market cap of 22.1 billion. And then now we are all the way down here to 10 billion. So been sliced over 50% from December of last year alone. The announcement was made on February 12th here. So let's go back there. So February 12th, it was sitting at a market cap of 16 billion, now down to 10.74 billion. So cut in about a third, over a third here in terms of that market cap for BUSD. And at the same time that has happened, let's take a look at USDC over here as soon as that wants to load. USDC. And I would expect that the USDC market cap has gone up in the meantime, or maybe it's gone down, but definitely not at the rate that BUSD has. So let's take a look here at the past month. So while BUSD has gone from 16 billion to 10 billion, USDC has gone from 43 billion to 42.57 billion. So really a very insignificant decline here in USDC. And we could also hypothesize that some of the stablecoin outflows were actually going into Bitcoin and Ether. But the difference here is that USDC does still have the go-ahead to continue being issued, while BUSD has been deemed a security by the SEC. And this raises the question for me of why is BUSD being targeted but USDC is not, and the even more interesting question of if the SEC does go after USDC, is Coinbase going to delist it the same way they delisted BUSD, or are they going to continue supporting it and fight back against the SEC because they do actually have a hand in issuing this stablecoin? So very interesting things going on here. It pretty much appears like nothing in the crypto market is safe at the moment except for Bitcoin, as we see full exchanges being attacked, we see stablecoins being attacked, altcoins. I mean, it's going to be an interesting year for sure. I do think that a lot of regulation is going to take place, and we're going to just have to see how the dust settles. But as of right now, we know one thing and one thing alone, and that is that Bitcoin is not a security. And I think that is the one good takeaway that we can take from all the craziness that has been going on in the crypto markets. Now, one thing I do kind of want to wrap this up talking about here, let's go back to DeFi Llama. And we talked about Base quite a bit here. This is effectively Coinbase's new Layer 2 solution that they are building on Ethereum, where they are enabling you to build games, lending platforms, decentralized applications, DEXs, NFT platforms, stablecoins. This is effectively going to be a Layer 2 built out on Ethereum here, which is intended to basically bridge the users from Coinbase over to DeFi. Coinbase has 110 million verified users, $80 billion in assets on the platform. And according to DeFi Llama here, we can actually see that Binance sits at $72.36 billion in assets on the platform. So based on these two data points alone, this would mean that Coinbase actually does have more total value locked on their platform and would be in first place. I'm not too sure why it is not being tracked on DeFi Llama. We also cannot confirm here if this is actually accurate. I believe that Binance has a lot more trading volume than Coinbase has. Let's actually take a look here. Let's go to Binance's website and see how many users they are registering. Binance just down in Australia. Nope, I just want their website. Okay, so let's go to Binance Cryptocurrency Exchange. So they have 120 million registered users. So pretty interesting here that Binance does actually have more users than Coinbase, but based on the data we have, Coinbase does appear to have more total value locked on the platform. Not sure if that is the case or not, but the point being here that OKX comes in second place with $8.1 billion in assets under management. So significantly behind both Binance and Coinbase, which do have a substantial lead on the rest of the market. Then we got Crypto.com down here with 3.63 billion in TVL, which actually would put it in fifth place if we do account for Coinbase coming in here in either first or second. Now, very interesting that Coinbase is looking to build their very own blockchain. This actually does come at a time here when we have BNB Chain sitting in second place in terms of TVL and Cronos sitting in 10th place. So Base could in fact be the thing that does knock Cronos out of the top 10 here, depending on how successful it is. And honestly, I do think that Base is going to be successful, as one thing Coinbase has really been able to do is act as that beginner-friendly centralized exchange for newcomers. A lot of beginners do prefer Coinbase for the easy to use UI, and I think that is going to be the way for them to now bridge these users into the DeFi ecosystem. So very interesting here, as now these centralized exchanges are not only competing in terms of their very own exchanges, but also in terms of these decentralized, or not decentralized, I mean that's kind of a BS myth for the most part, but just in terms of building up their own blockchain infrastructure as well. So things are getting very interesting here in the crypto market, and as always, I do plan to keep you informed on all of the news that is going on here. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Tuesday, and I hope to catch you in the next one. Peace out for now.